So, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding some nice stocks just for you. So all you have to do is just watching this video and decided if the following stock could be something for your portfolio. It doesn't get much easier than that. In return to that, please feel free to hit the subscribe button below and become part of the Monkey Stock Club family so you will never miss a video again. Please be aware that everything I say here is just my opinion, as I'm not a professional investment advisor. As you can see, I'm just a monkey, but nevertheless I love to analyze stocks just for you. So let's stick around and discuss some numbers now. So to analyzing the stock, I use the high growth investing strategy. It consists of 6 KPIs. For every KPI you can get 0 up to 3 points. So in total, a stock can get a maximum of 18 points, and this indicates a high growth stock. So today we're going to talk about Canadian Solar. I already published a video some days ago. Nevertheless, this is a stock I discovered for me just weeks ago, and I'm here to do my best to explain why I think Canadian Solar could be a great opportunity for each of us. And I'm very excited about this stock. So in this video we're gonna do a pretty solid breakdown of my researches and also of the stock analysis, and we're gonna go over all the 6 KPIs that you see here below. And yeah, so stick around for this entire video, because I think they could be massive opportunities. As you see here, you could double your money within the short or midterm. And yeah, let's get started. So the 6 KPIs that I use for the high growth investing analysis, the EVS divided by the sales actual, the gross margin, the rule of 40, the sales growth, the debit ratio, and the PE, the price earnings ratio divided by the profit growth, as Peter Lynch mentioned, a ratio of 1 and below 1 indicates an undervaluation, and I will also use the formula of Peter Lynch for the fair value. So stick around for the entire video, so then you will see also the final overall assumption for Canadian Solar, and don't miss the chance. So the profit growth estimation for 2021 is around about 22%. That's not such a huge percentage, but nevertheless you will see the final figures then on the next pages. And at the end, an high growth stock could achieve a maximum of 18 points if they get always 3 points for every KPI. So then let's start with the first one, the enterprise value. So in general, the enterprise value is a measure of the value of the company regardless of its financing. And if you divided the enterprise value by the sales, you can get an important ratio of the estimation of an valuation of a fast-growing but still loss-making technology company. So in terms of the Canadian Solar, we have a market capitalization minus cash plus debit of around about 3.7 billion divided by 3.2 billion. We have an overall number of 1.16, so we are far below 8, so we got 3 points. In Yahoo Finance they showed us the last version of the enterprise value divided by the revenue of 1.26. Here also the development, quite a nice performance of Canadian Solar, and yeah, the big question is how they will proceed in the future. Next one is the gross margin, trailing 12 months, sales minus direct costs divided by the sales, and the gross margin provides a good indication of the profitability of a business model, and the higher the value, the more money a company has available for sales and develop new products, marketing, etc. So 25% in terms of the Canadian Solar. You can also take a look into all the income statements, and you see the revenue, also the direct costs, and you would end up at around about 25%. So unfortunately 0 points. Next one, Rule of 40, trailing 12 months. It's not available due to the fact that I couldn't find detailed numbers for the free cash flow margin, and that is why we got 0 points. In general, it's a simple key figure for assessing the efficiency of a company growth and the quality of its business model, and the higher the value, the better the business model is, and everything above 40 could be considered as attractive. 0 points, as we have not available. Next one is the sales growth, trailing 12 months. So what I found is that we didn't see a big sales growth currently, because I couldn't find a lot of figures. 0.35, so that's more or less no sales growth. Exciting thing about this is what they will present within the next earning report. That would be a very exciting date for me to see the further performance of Canadian Solar. They try to enter also in the Chinese market, so they could be in great potential. 0 points, unfortunately. Here also a screenshot of the revenue development from 2016 up to 2018. Quite a nice development. Then a decrease, so they pumped up for 2 years, then a decrease in 2019. In terms of the earnings, quite a similar view, and also from 18 to 19 and decrease. And the big question is how they will proceed in the future, also for the final results in 2020. And the debit ratio 1.52, so the debit ratio is calculated by using the debit last quarter of 2.3 billion divided by 1.5 billion, so 1.52, and debit ratio less than 1 indicates low debit, while a debit ratio greater than 2 indicates a possible risk for debit. So as we are slightly above 1.5, we got 0 points. So there is quite an risk in terms of debit for Canadian Solar. And last but not least, one of the most important key figure for the assessment of an already profitable growth stock, and it calculates the ratio of the price per earnings and the profit growth, and in ratio between 0 and 1. This indicates an undervaluation of a stock, as Peter Lynch already mentioned. So if the price per earnings is equal to the profit growth and we received 1, then it's quite a nice opportunity from Peter Lynch's perspective and his formula to invest into in stock, due to the fact that we have a fair price. Here we have an undervaluation of Canadian Solar, and therefore we receive 3 points. And here Q3, I think they will also release the final earning report this week, so that's quite interesting from for everybody. And if they also beat the estimation of the market, then I think they could be in further pump of the price. And finally, the big question is, what is the fair price? So what I did is, as always, when I do the analysis for you, I take a look into the EPS, so the trailing 12 months EPS, the expectation for the EPS that I found also on other sites of 3.28 for 2020 and 2021 4 US dollar EPS. In Yahoo Finance I found 2.81 as an estimation and 3.38. In terms of the high growth score, they received 6 points out of 18, so not such a big value in terms of the high growth investing analysis. So they could doing better and they could have a better performance in the future. But yeah, I took also a look into the EPS 17, 18, 19, 20, 21. And if we calculate then the average of the profit growth within the last 4 years, so if we compare 1.7 to $4, then we have an overall profit growth average of 34%. And so this also indicates that we could assume if they perform the same as the last years before, then we will always end up at around about 20 up to 35%. Here the formula of Peter Lynch, the EPS, the estimated for the next fiscal year 2021, $4 multiplied by 22. And this is also less than the average of the last 4 years, so that's quite good to use this one. It's a conservative value. We end up at 88 US dollar as a fair price. So that would means you can easily double your money if they would achieve these EPSs, the estimated, due to the fact that the fair price would be then around about 80 to up to $90. And from my point of view, there could be also further potential and also pumps in terms of the price if we take a look into other solar companies like SolarEdge, for example. They had also very, very nice performance within the last years. So, and last but not least, I also use the 35% as an average, as you saw here before, here above, and let's say here above my head, 35% of the profit growth average. And if we use this value, 4 multiplied by 34%, then we end up at around about 136 US dollar. So we can triple our money. So this is the overall assumption and my analysis. I hope you enjoyed the video, and this is what I would like to share with you. Still a very, very exciting stock for me, Canadian Solar. And if you like the video, please hit also the like button for the YouTube algorithm. Please feel free also to hit the subscribe button below to become part of the Monkey Stock Club family. So I will at least release a video or more than one video once a week, and you can keep updated then on nice investments. And it helps also to establish here to increase the community here within YouTube. So yeah, I wish you a nice day, and hopefully we will see each other again. Bye bye.